Hi guys, this is Dr. Sadashivam once again with you. My dear friends, if you have been observing the stock market for the last 1 month, there is so much of volatility. Especially as far as the long-term investors are concerned, there's not much of an issue. But for those who trade on a daily basis, your short-term traders, it's almost become very difficult to plan. Now, if you have seen in the last few days, Nifty, the volatility on 19th of August, it was going up, and people were saying that it will break 18,000. I'm talking about Nifty 50, and the next day, 19th of August, it started coming down and down and down, and it reached 17,400, and many experts believe that it will come down further and it will reach 17,000. A lot of people were talking about US Fed, employment data, European Central Bank, which were planning to raise interest rates by 75 basis points, China-Taiwan problem, Nord Stream 2 pipeline, gas pipeline. Russians stopped that pipeline and they were not giving gas to Europe, and on top of it, dollar was becoming stronger, rupee was becoming weaker, and most experts were also saying that we will come down to maybe 15,200 levels. Remember 15,200 levels 3 months back. HDFC shares were available for 2,000 rupees, 1,900 rupees. We're talking about 2-3 months back. People were thinking that the market will fall down, and totally on the contrary, it came down on 19th August, it came down to 17,200. After that, we really don't know, during the last week of August, it once again started going up. Yesterday it was about to breach that 18,000, but today yesterday it crossed 17,900, 17,950. But today, once again, it has started falling down and it has started showing its colors. This is the story of stock market in the last 1 month. I will try to explain some of the characteristic features and how should we plan our investment decisions in this kind of a situation. And before that, we will talk about some of these global events. We may live in a separate house, we have our own kitchen, but whatever happens in the colony, they will have some kind of an impact in our house also. Like your neighbor prepares biryani in kitchen, that smell will come to your house. You will ask them, Babiji, what you are preparing today? Guys, I'm a pure vegetarian, I don't take eggs also, right? Okay, so every global event has its impact on our country also. Like for example, you have a Fed meet which is happening there. In the Jackson's Hole Symposium, I've put in a separate video. There, head Jerome Powell very unequivocally he said that we will even compromise on growth and we will increase our interest rates. Balance sheet contraction is what he is talking about, taking a very hawkish stance, and he says the greatest problem inflicting not just US but the whole world is inflation. Same views are reflected by the European central banks and their jobs data, their inflation data, host of all issues. China, Taiwan is another problem, right? Another issue. So anything that happens outside the country will have an effect in the Indian equity market. One more important thing, for some time Singapore Nifty and Nifty 50, they are going in opposite directions, guys. Yesterday, day before yesterday, Singapore Nifty was indicating a gap down, not 1 or 2, 100, 150. But the moment market opens at 950, the market is going up like this. Every investor who had sold call options, who had shorted call options, they're all running for cover, right? So all these global events will affect Indian market, but now Indian market is not in line with them. They go down, we are going up. The dollar is going up, the strength of the dollar is going up. Obviously, that's a kind of a safe haven currency. Everybody likes to invest in dollars. But even in that situation, the Indian currency has maintained its strength, guys, in comparison to the other Asian currencies. So broadly, if you see, the domestic consumption story is extremely good, guys. We have a demographic dividend of 1.3 billion population, guys. 1/6 of the world's population live in our country. There can't be a better demographic dividend like this. Consumptions have started. Your opening trades, discretionary consumptions. Opening trades are those, जैसे cinemas are open, gyms are open, beauty parlors are open, all Babijis are laughing and going to the beauty parlor. Some applying lips, waxing, facial, hair dressing. Guys, the domestic economy is so strong. Whether it is goods, whether it's services, the data, I have put in a separate video giving all the data, graph, etc. But this is just an outlook kind of a video. So I'm just giving you a broad outlook. Indian economy is doing extremely well, right? But remember, there is a marriage in our house. There is exuberance here. Everybody is celebrating. But around, the situation is not good, guys. The neighbors, environment. Europe is going through the worst recession. America is going through the worst recession. China is having lot of issues, right? Both US and ECB, they are taking a hawkish stance. They can compromise on growth, guys. They take a hawkish stances. Of course, hawkish is interest rates increasing, their hawkish stance, dovish stance, accommodative stance. Put up separate videos in the macroeconomics series. Please learn all that. I don't have time to explain all that here. So those impacts will continue to play on the Indian market. But in spite of that, structurally we are very strong, guys. We are very strong structurally because of some of the efforts taken by the government of India, especially in the last 7 or 8 years. Look at some sectors, guys. Look at cement sectors going high. Adani on top of it has already taken, acquired your ACC and Ambuja, and this is one sector which is going to surprise everyone, guys. There is a lot of supply discipline, especially as far as the cement sector is concerned, and people like the domestic companies, guys. So broadly, the whole sector is domestic, right? And on top of it, you have the government's capex spending, infrastructure spending, ports are being constructed, airports are being constructed, roads are being on a daily basis. Gadkari Saab is calling, Chief Engineer Banao, how many kilometers of road have you made? Everybody is made accountable. Superintending engineer, chief engineer, everybody is put to task, guys. Not just sector. Look at banks. Touch any bank. They are giving you windfall profits. Be it your Bank of Baroda, your State Bank of India. Look at ICICI. What has happened, guys? And slowly and steadily you will find HDFCs will start coming. HDFC Bank will start coming. FIIs have put in 3,000 crores, guys. 3,000 crores. They invested in India, right? And when these guys, FIIs come, they have some ladlas. HDFC Bank. These are places where they put a lot of their money, and broadly, if you look at the valuations, they are fairly good, quite attractive. So one is cement sector, the second is banking sector, and to some extent, IT sectors are not doing very well because they have taken a hit, and it's mostly export oriented. And if US catches cold, these people will start sneezing, right? So I think especially as far as IT is concerned, especially when you invest in small caps and mid caps, you need to be careful. And as far as banks are concerned, their credit growth, corporate loan spending, corporate deleveraging, lot of that has happened earlier. So now they will start taking loans from the banks. So now there will be re-leveraging as far as banks are concerned. Now as far as auto is concerned, guys, festival season is coming. Now you have Navaratra, Deepavali, Dhanteras, the demand obviously has to go up. Big waiting is there. We had a lot of supply constraints during the last year. We are out of the woods, and commodity prices have cooled down, guys. You don't see that effect coming immediately. There is a lag period involved. So whenever the commodity prices had come down, say 3-4 months back, the effect of all that will start reflecting in profits from the coming month onwards. So share market, all that will come into the share market, and slightly it has come down today, but it will once again run towards 18,000, right? Now if you look at the focus of the government, whether it is defense manufacturing, Atmanirbhar, you would have seen videos of INS Vikrant, and robust demand is picking up. China plus one strategy, PLI, production linked incentive strategy, and everybody's eyes is on India. China plus one. China is not doing very well. So people are looking at India as an alternative to China, and everybody's eyes are on Bharat Mata. Seriously, we've already talked a lot, but we need to be slightly careful because there is a caveat. The global events are not very good, and especially as far as Europe is concerned, where from will they be getting revenues to give subsidies? I'm talking about gas, right? And those European countries do not have good demographic dividend. They don't have good, they don't have 1.4 billion people, small countries, and very few population. Most are old people surviving on pensions. What to do? Sitting in the park and discussing what is happening in US. Nothing is there in those small countries. If you look at China, that's also going through problems. The real estate is into woods, big problems, and a lot of China, Taiwan, there are issues, and I don't think in the next 3 or 4 months there will be any good news as far as these countries are concerned. Whether it is UK, whether it is China, whether it is Europe, or whether it is US. No good news in the next 3 or 4 months. Because those guys, they're going through the worst possible recession. Guys are saying interest rates, global headwinds, all that will continue to be there. But in the short term, structurally we are extremely strong. And yes, as we have explained before, the premiums in India even today slightly higher compared to China, Taiwan, Hong Kong, Japan, etc. So that's slightly a danger scene. Our valuations are still slightly higher, but we can expect those FIIs to come back. They took back 3 lakh crores, guys, 3 trillion rupees. It is their money. It's called as hard money. They can take wherever they want. They can put it in any country, right? Wherever they find the valuations good, right? But we can be very confident a large portion of that money will come to Bharat, right? As far as banking stocks, where the money will come? Bank. Even today, the PE valuations are very good, attractive, only as far as banks are concerned, right? We have already discussed their NPAs have come down, and government is very strict these days, guys. Those days are over. Taking loans and say bye-bye, delinquencies. It can't happen now. The properties are recovered till the last drop. The property is recovered. Guys, understand, write-off doesn't mean your loan has been excused. Writing off is a provision in the balance sheet just to take it out of the calculation. That is write-off. Don't be under the impression that they will not recover the loan. They will recover, try to recover the loan till the last naya paisa. Very much like Ganna juice. What does he do? He will put that Ganna 4 times into the take the last drop. This government will do that, right? Metal sector slightly there is an issue. One needs to be very careful. Tata Steel, maybe the share prices have got the next 1 or 2 days, but China plays a very important role because they have a large steel supply. Europe, lot of plants are shutting down, and that might affect the supplies. But China will come there. They have kind of a dead weight mechanism. Wherever the supply goes down, prices are increasing. These guys will use their levers. Just as a bus driver uses his gear lever, they will use those levers in order to, ensure the right price discovery, right? And even Morgan Stanley is talked very well about the India being a very good destination. Corporate deleveraging is happening, credit growth is going up, the corporate balance sheets have improved, and the Indian economy is going to do extremely well. But yes, these small headwinds are there. We shouldn't be oblivious to these little headwinds, but as a whole, India is a very good investment destination, and when people from all over the world are coming and investing in Indian companies, we should also start investing. Okay guys, this is Dr. Sadashivam signing off till we meet again. Bye bye, Jai Hind.